This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello everyone, and very much welcome to another edition of Breaking Banks Europe podcast. You're listening to episode number 215, and we're talking about Fintech4Good today. And to do that, we're actually having a very fabulous host, which is Jacqueline van Ende, the founder of Carbon Equity. Jacqueline, welcome very much.
Thank you. Thanks for having me.
Great as you're here. I think you've got a great story behind you with the work that you're doing with Carbon Equity, and I'd love to explore what impact you're trying to make and how we can inspire perhaps some other people as well to do the same. Can you tell us a little bit about the story? How did you get into Carbon Equity in the first place?
Yeah. So I have a background as an entrepreneur and as an investor. I started off my career in private equity with Hall Investments. Before that, I was a startup entrepreneur already. As a student, I founded the Kleine Consultants, which some people might know. Mm-hmm. After 4 years in private equity, I desperately wanted to be on the startup side again. So I joined Rocket Internet, spent almost 6 years building companies in Southeast Asia. And then accidentally became an investor again by joining Peak Capital as a VC partner. But in 2019, I really woke up to the climate crisis. I read the book, The Sixth Extinction, which talks about the 5 major extinctions in the history of the planet and how climate change, which in the past has played out over thousands of years since the Industrial Revolution, has been compressed into the past 300 years. And the speed of biodiversity extinction, speed of temperature changes is going at an unprecedented rate. And it helped me realize that, in fact, nothing else matters other than helping solve climate change, because having a career in which I would simply earn a lot of money and be very successful in my career was pointless if there is no livable planet, which is sort of like the future we're sort of rapidly moving towards. So at that point, I decided I wanted to spend the next 30 years of my life helping solve climate change. And I do that with the weapon of capital. Because I ultimately believe that whether desirable or not, that money ultimately decides outcomes in the world. So for me, this is sort of the meta weapon of how I can change outcomes through money.
Yep. Cool. I think that's definitely a fabulous story. And I know that, I think there were a lot of people that woke up to the climate change, I think, over the past years. But you see that that gave a multitude of directions in which people are looking for solutions. And from chaining yourself to a highway to, suing large corporations, up until I think you take a relatively positive approach by empowering capital and finding people that want to invest in the dream that you have as well with Carbon Equity to make this happen.
Yeah, exactly. I would say Carbon Equity is a very pragmatic solution. So I think there is a role for everything. I think there is a role for protests and Extinction Rebellion and suing corporates. But there's also really a pragmatic role for capital within the existing framework of capitalism. And our thesis, we need to invest in climate technology. This is not like some sort of niche. This is a full-blown industrial revolution, right? In the next 30 years, we need to transition from a fully fossil-dependent economy to a fully fossil-free economy that will touch upon literally everything. So this is a massive challenge, but it's also a massive investment opportunity. And yes, he can make money with that. So I think the innovation of Carbon Equity perhaps has been to say, you can invest in climate tech, you should invest in climate tech, and you're allowed to make money with it. By the way, you will make money with it because it is one of the biggest macroeconomic trends there has ever been. Yeah.
But this is, of course, also what's very often scrutinized if you talk about green investments is like, okay, we have to accept a discount on returns if we want to do the right thing, right? And I think this has always been a bit of a tension field. How do you deal with that?
Yeah, it's an incorrect understanding because let's first of all separate green and impact. Yeah,
Mhm.
so carbon equity, we don't necessarily call what we do impact. We call it climate tech investments. What we do is invest in any climate technology solution under the sun via fund of funds. We'll get to that later, but we basically invest in solutions to the greenhouse gas problem.
Yep.
Any of those solutions, whether you're talking about thin film solar cells, carbon-free cement, electrification of steel production, alternative proteins, you name it, any solution is a double-digit growth market. So are you going to make money in that? Yes. Is it risky in certain technologies? Absolutely. Does diversification therefore make sense? A whole lot. But can you make money by investing in growth stage companies? Yes. Now, I think very traditionally, at a climate impact, when you say I'm doing climate impact investments, what does that mean? For us, it means investing in companies that have a solution to the climate challenge, right?
Yep.
The impact part of it is very much associated to social impact or to the very traditional sort of impact returns trade-off. And there can be such trade-offs. Like if you're really investing, let's say, in nuclear fusion, that's a technology that's going to be 30 years away. It's a technology that's going to need a ton of capital.
Yeah.
So are you taking off-market risks? Yes, you are taking off-market risks. Can you make outsized financial returns? Yes, you can make outsized financial returns, but it's going to be a lot more risky. So there's a whole contingency of climate impact technologies where you can have your cake and eat it too. You can invest in positive technology and make market rate or above market rate returns. But there is also contingent of technologies that are so early or so capital intensive that they require they offer a different market rate return, different risk return trade-off.
Yeah.
And some investors are willing to make those trade-offs to have the impact that those investments can have. And then there is a return. So that bottom line is you can make market rate return climate tech investments. If you so prefer, then you can also make off-market risk return trade-offs, which are higher on the impact side or higher on the additionality of impact.
Okay, yeah, understood. And so how do you bridge then these two worlds, all right? So you stand in the middle between other investors and investment propositions. You mentioned the word growth stage a couple of times. Is that sort of your sweet spot if you look at the investment side, where you're not too early stage, but really focus on a bit later stage companies? How do you balance that?
Yeah, let me briefly explain the model of carbon equity. And so we are a fund of funds investing platform. So that means that we don't do direct investments, but what we do is we select the world's best climate funds. There are approximately 1,000 climate funds out there across Europe and the US. And that's across both early stage venture capital, growth, and buyout. What carbon equity does is, with a team of former AlpInvest investors and people from McKinsey who are really specialize in climate technology and energy transition, we select based on climate diligence and financial diligence. We select 7 to 10 of the world's best climate funds every year. And the reason why we do a fund of fund structure rather than doing direct investments is because, on the one hand, it allows us to deploy capital in a really scalable way rather than ourselves being yet another climate fund. We find the world's best investors to invest on your behalf. And from an investor point of view, so people who are investing through carbon equity, they get the world's best investors who are investing on their behalf instead of them doing angel investments. So literally Bill Gates, we're an investor in Breakthrough Energy Ventures, which is the number one climate fund globally. Bill Gates is one of the GPs there. So he's doing the investments on your behalf. And secondly, instead of investing in one company or in 20 companies, as you would in a single fund, you invest in 150 to 250 companies. So you diversify. So, and you mentioned growth stage. Yeah, so we invest both in really early stage funds, so funds that are investing in spin-outs from, let's say, MIT And but also in growth stage, pre-IPO funds or even buyout funds that invest in really late stage rollout of mature technologies.
Okay, and do you see are there sufficient propositions around? I mean, if you mentioned to 7+ funds to select each year, I can imagine that if there are like 1,000 around, I mean, that's not even such a big number, right? So you have to be pretty picky to succeed at this, I think.
Yes, exactly. Yeah. So I mean, the climate tech universe is less broad than, let's say, your general buyout universe. So 1,000 funds is a lot, but it's not endless. But we are very picky, and we only need to select 7 to 10 funds a year. So the bar is super high for those funds. When we invest 10 to 15 million euros per fund. And private investors can access our funds currently from 100,000 euros and in the future from 25,000 euros. And that's exactly the rationale why, as a private individual, I would never, ever have access to a venture capital fund where I need to invest 5 million, let alone 10 million. Even if I'm a family office with 50 million euros in assets under management, then doing a 5 million single investment in a single fund is very risky. And so being able with small tickets to invest in a portfolio of funds, which all have a climate technology aim, just makes a lot of sense. That's our thinking.
I think that's really nice. And so do you, you could actually talk about financial inclusion here, although normally this investment category is not the target for financial inclusion projects, but it is nice, of course, indeed, that people can actually on one end contribute their capital to these causes, as well as actually get access to the investment opportunities.
Yeah, exactly. And there is a financial inclusion goal. I mean, Carbon Equity works with professional investors and private investors. On the professional investor side, it's your traditional investors, so family offices, foundations, semi-institutional, ultra-high net worth individuals who are investing between 1 and 20 million. But on the private individual side, it's really about democratizing access to impact private equity. And our big thesis there is that our core target market has assets between 100,000 euros and 10 million. So private individuals for whom it makes sense to put, let's say, 10, max 20% of their liquid net worth into private equity, typically have no access. So by lowering the hurdle, more and more people can participate in private markets. And the reason to do so is because, one, you can have way more impact investing in private markets than moving around, shifting around money in the listed stock markets. And secondly, you can also generate outsized financial returns because it's basically as if you're investing in Tesla before when it was a venture case. So the opportunity for generating outsized financial return is much higher in the private markets than in the public markets. At the same time, of course, it also comes with more risks. So investing in private markets is not suitable for everyone. So when our minimum is 25,000 euros, you still kind of need 200 to 500,000 euros liquid on your bank account for that to make sense. So it's democratizing between brackets.
Understood.
But our vision is the lower we can get those minimums, the more people will be able to participate. So don't exclude a future where in the future maybe you can invest from 1,000 euros in carbon equity, and then that could be fine if you have 10, 20,000 euros liquid net worth on your bank account. Yeah,
I think in that sense, especially mobilizing capital is definitely in Europe something we need to work on because the private markets are just very limited compared to, for example, the US. So I think from that perspective, it's really favorable that you're actually opening these opportunities up, which also educates investors as well.
Totally. And there's a huge opportunity. So if you look at that contingent of people between 100,000 euros and 1 million, there's 177 trillion in capital sitting with that target market, which is 3 times the size of the total institutional asset management market, with less than 1% invested in private markets. So if you just open the door by lowering your minimums and making it frictionless to invest, if it becomes as easy to invest in private markets as it is to invest through Bux or the Giro, then that less than 1% will grow to maybe 5% or 10%. And you're just going to add a massive amount of capital to the market, which can help fund solutions to the world's biggest challenges whilst also creating financial returns for those individuals and making the financial markets more inclusive.
Yeah, yeah. No, I think that's definitely a really good cause, and especially if you can move that towards fighting climate change, I think you can really make a big impact there. And so, how do you see the institutionals responding to this? You mentioned a couple of a more institutional type kind of investors, but are they following this, and are they also standing by to jump in at some point, do you think?
Yeah, I mean, institutionals are at the beginning of their journey. So, what is good is that you see a lot of institutionals who are they want to invest in climate tech. All right. So, APG has been doing a pretty good job in the Dutch pension market. Also, smaller institutionals are really, they often have a mandate. We need to invest in climate tech. Their main challenge is, how do we do that? Because a lot of climate tech, not all climate tech, but a lot of climate tech is venture. So it's relatively high risk. And institutional investors, both insurance and pension funds, are rather risk averse and invest very little into venture, right? That's also that's a big critique in the media on all of these big pension players, because there's so much capital with the pension players and they could have such a big role in financing innovation, but they're not doing it, right? So the risk profile of investing into venture funds is often a little bit of a difficult to swallow for institutional investors. Yeah. And then there's also the size and track record problem, because if you look at climate tech, then most funds are relatively young. They might be in their second, third, fourth vintage. The oldest climate funds would be maybe 10, 15 years. So compared to, let's say, buyout, private equity, there's much less track record to go by. And then these funds might be relatively small being like, 100 million up to 500 million. So if as an institutional investor, I want to go in with a ticket of 30, 50 million, then you can't actually place that with a lot of single funds. And that's also where carbon equity can come in to help them deploy much bigger tickets in a diversified way. So that's, but even for us, these conversations will take 1-2 years, which is a lot of internal conversation within the institutional investors on how do we
it's definitely a challenge.
Risk, how do we do it exactly? But the intention is there, so that's a good start.
Yeah, nice. I think indeed, I tend to say always that the money has been piled up too neatly in very big piles for it to actually be manageable for all kinds of projects where you want to bring it.
Yes, that's well said. Because investing in venture and investing in climate tech, relatively young space, is still quite messy. So those neat piles, messy ecosystem. How do we go about a lot of questions?
Doesn't really match. No, exactly.
It will take time. Yeah.
Hey, and so I think that's this sounds like a project which is spot on for this age. I think there would be a lot of people that are investing with you, and so you must also grow, I would expect. So how's that going so far with you? You started out in the Netherlands, and what's the rest of the journey?
Yeah, so that went actually unexpectedly well, I would say. Indeed, building a business is very much a timing thing. And I think our timing was spot on with an emerging interest in climate tech, but also a lot of people understanding that a fund of funds model makes a lot of sense for investing in climate tech. So we raised 200 million over the past 2.5 years, more or less, for our fund of fund strategies, which really did not disappoint, both from professional and private individuals. We have approximately 700 investors on the platform at the moment, primarily from the Netherlands, Belgium, and Germany. Also some investors from Nordics. And we have investors from all around the world, from India to Brazil. But the majority is obviously in Benelux and Germany. We set up an office now in Hamburg as well, in Germany, to serve the German market. So our ambition is really to go from the go-to climate investment platform in the Netherlands and Belgium to really being a European play, and next step, hopefully a global player. And the ambition is to get to at least 1 billion in assets under management in the next 3 years. And I feel fairly confident we'll get there.
That sounds like a really nice ambition, but indeed it seems like you've got the momentum at the moment. So really cool. And so how do investors find you? Is that all directly, or do you work with partners as well?
No, so far it's primarily direct. So people invest through our website, carbonequity.com. We are in the process of looking at partnerships with primarily private banks in first instance.
Mm-hmm.
We're in talks with all major private banks in the Netherlands for working together. And a future prospect, but this is still quite far off, but sort of an end game kind of dream would be that we're integrating on financial platforms. So that, for example,
Okay.
through Brand New Day, through pension platforms, for example, you could choose carbon equity as one of the funds that you would like to put your pension in. It just makes a whole lot of sense. A lot of people already invest pension money through carbon equity or inheritances or children's savings plan, because the timeline of your investment, private equity investing in private equity is patient capital. So it's typically fixed for 7 years, total fund lifetime of 10 to 12 years. So really need to only invest capital that you can afford to park for quite a while. And that is something that aligns very well with pension timeframes. And then also the goal of having a livable planet at the end of your fund life, including a well-paying pension, but also a environment in which you can have a pleasant life. Those goals align very well, both for children's savings plans and for pensions. So that would be an end game to really integrate with as many financial platforms as possible. Also for us moving towards smaller tickets. We can handle 25K tickets. We've built the technology backbone of our platform. So you can have a pretty frictionless digital investment experience through our own platform. But going down to €1,000, I'm not sure if we'll do that ourselves or whether we'll only do that through integrations with partners.
Yeah, I can imagine that at some point would be more flexible to actually get that sorted out.
Yeah.
With partners, technology-wise. And so do you see that that's, because I can imagine, especially if you look at sort of a self-service investment option for third parties, you might actually want to look at the listed option perhaps for that. Is that also potentially on the roadmap at some point?
Yes, it could be. So we are looking into more innovative fund structures. So we started very plain vanilla. We started with closed-end fund structures. We're an AFMD licensed managers. At the moment, it is not tradable, or there's a very limited liquidity window. Sorry for all the technical lingo here in your podcast. But so plain vanilla, because that's the way that your instruments are accepted by the market.
Yeah.
Now, looking towards the future, and especially going towards smaller minimums, but also moving more towards the retail type investor, at least mass affluent, high net worth individual. What could be very interesting is to have evergreen fund structures so that you can enter and exit the fund at any time, and then potentially either semi-liquid, so that you you add liquid products in the mix with your illiquid funds, so you have semi-liquidity, or even listing the fund, which would then make it fully tradable. The goal on our end is obviously to keep on raising primary capital. And because our critique is when you buy shares on the stock exchange, typically you're shifting money. If I buy
you're not investing, really.
You're not investing, exactly. No. You're buying shares. So trading is something quite different from investing. And what we're doing is trying to mobilize primary capital. So it would never be a goal in itself to list the fund and to make it tradable. But if it is a way to raise primary capital from the retail market, then at some point that definitely is a possibility. Won't happen within the next 48 months.
No, exactly. I can imagine. I think it's also more that I was thinking about it from the perspective that I can imagine that certain partners would want it to be tradable for them, for you to be eligible for that.
Definitely. And we're having a lot of the conversations also with more retail banks. And, you know, a lot of banks are looking into private equity and how do we offer private equity to our customers? Especially for private banks, they're struggling a little bit with relevance. So, you know, in the days of my parents, you would have your banker or your private banker who would trade on your behalf. And then you got the Giro and Bux, and everybody in my generation, everybody between 30 and 55, more or less, grew up with self-directed trading. And so the value add and also the ability to reap fees for private banks on trading has almost disappeared. So a lot of private banks are looking for relevance in being able to offer something that people cannot get on the direct market. Hence, the interest in private equity, also a higher return type asset. And a lot of private banks are looking to attract a younger generation of investors because, well, I won't mention the name of a bank, but one bank told me that their average customer is 67 years old.
Yeah, that's horrible. Yeah.
I would have some sleepless nights if I were the CEO, because that means that within 10, 20 years, your customer base is not there anymore.
Yeah,
So all of
that's
these
indeed. If you talk about extinction,
yes,
this is one group that will. Yeah,
it's definitely an extinction case, a very near-term extinction risk for your business. So a lot of them are looking for a story towards next-gen investors, and that's where climate has a massive appeal of. And generally,
exactly.
the idea that money is not only a goal in itself, but it also is a means to help solve global challenges. And our thesis is that that's messaging, money as a means to affect real change in the world, is something that resonates much with our own generation.
Yeah, no, I totally agree. I think that's it's a wise thing to do to try and diversify the portfolio there and attract a younger audience like that. And so do you see that as well? I think do you if you look at your investment population, do you see a lot of young people? I mean, of course, you have still the capital gains you might need to get, which might put you in a bit of a challenging position there. But I can imagine there's a lot of attention, or at least for jobs, for example, at Carbon Equity.
Yeah, way more. Our investor base is much younger. So, I mean, our range goes from a 3-year-old that's an 85-year-old. But the average age is between 30 to 55, I would say. Also, slightly more male-female diversity than your average private bank, which is good. Not good enough, but better than most. And in terms of employees, we're sort of a magnet for talent. We have a really cool team. Our CMO came from Felix. We have a lot of people who came from Alpenwest. People came from McKinsey. So we have somebody from MessageBird. So really attract talent from both top institutional financial players who are basically looking for, literally the guys who came from Alpenwest, they say, it was super interesting, mega launchpad. I learned what it is to make a ton of money, but I don't care enough about only making money to do this the rest of my life. So a lot of people looking for purpose are seeing that they can be an A player and join a AAA team, but work with purpose, and that has a mega appeal on the market.
No, I can imagine that indeed. That's it's definitely good. And it's nice, but also if I listen to the people that you've got on your staff, it feels a bit like you're a tech company as well, right? So you're very much capital oriented. But do you see yourself as a tech company?
Yes. But Carbon Equity is a bit of an odd beast. We're an asset manager meets fintech platform. So on one hand, we're an asset manager. We build fund-to-fund products. We sell investment products, and that makes us an asset manager. On the other hand, we're a fintech platform that really democratizes access to private equity. So and we are venture backed. So we raised 9 million euros in total, 6 million Series A last year from a big French fintech investor. And so basically the thesis there is scalable asset management. We're a wealth tech platform, and similar to a Moonfair, for example, which have now 2.5 billion in assets under management. They democratize access to general private equity. This is what we're doing within the realm of impact private equity. And the idea is there is a market for asset management, but if you can reach a younger market and a more mass affluent or high net worth individual market, it massively opens up the capital base for asset managers. So that is the tech play. And the role of tech for us is two main goals. One is to make sure that we have a frictionless investing experience so that it's as easy as investing through the Giro, and through 5 minutes, you can make your digital account on Carbon Equity. And that should be painless. The other goal is really bringing to life how money is moving the needle. So through the app, you can see all of the companies that you're invested in. So you have a straight look through your portfolio. You can see all of the 100 companies that you invested in. see what they're working on. You have a news feed with videos of what's happening. So we also really, through the platform and engagement on the platform, really want to bring to life how money is moving the needle in the real economy. And that's what makes it exciting. And that's what builds sort of like an emotional appeal. And then the third element of tech is just automating everything that we do. So typically serving smaller investors is expensive. So you need to make sure that you're yourself extremely efficient in doing your KYC and keeping your investors updated with reporting, etc. So really automating our own operations, as a result of which we can serve small customers with low unit economics, is very much part of our tech thesis.
Yeah, cool. Now I can definitely imagine that you need the tech here to be able to indeed lower the entry barrier, as well as to make the process very efficient and actually not waste so much money on, investing the money on behalf of your investors. Cool. And indeed also that you make it so lively. I think it's also really helping people to be caught onto, I think, your platform as well as the investments that they make.
Yeah, definitely. I mean, we're investing in such cool companies like Form Energy. They make iron air batteries, and they have this reversible rusting process where, when the electricity runs through it, derusts, and there's no electricity, it rusts. And with that, you can save energy up to 100 hours at 10% of the cost of lithium batteries. It's like, honestly, we have an AI company that does, they can locate critical minerals. So they can predict with a very high accuracy where you might find critical minerals, which we need for the energy transition. So it's really exciting and also energizing and hope-giving to see all of the innovation that's happening within the climate tech space.
Yeah, no, I think it's definitely a very exciting space. Also, it's always challenging. I mean, I used to work in venture capital in climate tech as well. Clean tech, it was still called back then, but it's a tough game.
Tough game, definitely.
But
definitely
I think it's really tangible, and you can get really excited about the projects that you can invest in. So that's I can understand your enthusiasm for this.
Yeah, definitely.
Hey, and maybe I think we should be wrapping up, Jacqueline, because I think otherwise we're overextending our storage space on Spotify and other platforms. If we look a bit at what the financial industry currently is doing to actually fight climate change, what else could we do? Any call that you would want to make, or any collaboration you would want to appeal people to, or any thoughts?
Yeah, I think the basic understanding, important message here is money is power. Yeah, so we typically have always thought of like finance is finance, and I get my salary and I buy stuff and invest in stuff for financial returns. But money is power in every respect, and so when we think money is neutral, it's not. So it actually matters where you bank, right? So obviously, there's a lot of pushback on certain banks at the moment. There are banks such as Triodos and ASN, which really are fully fossil free. They're investing in stuff that will support the energy transition. So, as a retail investor, just thinking about your banking choices, those are definitely very integer and ethical banks to bank with. So that actually makes a difference. I think a lot of banks are looking at this space, are still struggling. How do we really move the needle? And one is changing policies on lending. That's already happening, probably most advanced. Climate risk is a big theme for them. And then investing in the space. So we see, quite a lot of banks trying to set up some climate finance type investments, or trying to be an investor in the space. That is good. So I think, generally the intention is good with banks, and the intention is good with financial investors. But this is about speed. So, if you're a retail investor and you want to be really serious about, supporting the energy transition, think about switching to a green bank. ESG is not the solution. Probably is better than non-ESG. So I recently sold all my Shell shares because I'm pretty skeptical on well, I think they're doing a lot of good things, and I think they can have a lot of impact in the transition, but I think the new leadership is not as committed as they need to be to the transition. So I exited that, and also investing in a fossil intensive portfolio is it's going to be a sunk cost. I don't see a future in which we can exploit more oil and gas resources. So a lot of the stuff that they have is going to be a sunk cost. So switch your investments, and then if you want to get serious about investing in innovation, obviously check out carbon equity one way or another.
Cool.
Yeah, that's what I would.
Thanks, Jacqueline. I think that's definitely a good call out to make for people to look carefully at the way their finance is actually making the world go around and what choices they can make to make impact there. So thanks a lot for sharing your story here. It's been really nice to listen about how carbon equity has been shaping so far, and it looks like a really ambitious agenda that really is going to make an impact. So I'm really keen on following how that's going, and good luck with everything there.
Thank you.
For everyone who was listening, thank you very much for joining in on Breaking Banks Europe number 215. We're very keen to have you back on the show on the next episode. See you soon, and good luck and make impact.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.